Hi everyone, my name is Kyle Hurley from Munroe Morrow Wealth Management. With all of the market volatility in 2022, you may have heard the term tax loss harvesting being tossed around. So, what is tax loss harvesting? Tax loss harvesting is a strategy to try and lower your current taxes paid to Uncle Sam. This involves selling an investment or multiple investments at a loss in order to offset other gains in your portfolio. Put another way, this strategy can be an effective way to make the most of these losses inside your portfolio. Not only can these capital losses offset other capital gains, but when your losses exceed your gains in a particular year, you can use the remaining capital loss balance to offset your personal income. Each year, you can use up to $3,000 of losses to offset taxable income. That limit is $1,500 for married couples filing separately. Should you still have capital losses after you offset your gains and then you offset your ordinary income by $3,000, you can carry this balance forward. In other words, there is no expiration date on these harvested losses. You do need to complete all of your selling before the end of the year to generate these losses, so make sure you do that prior to December 31st. Here are a few other things to keep in mind when it comes to tax loss harvesting. Number one, the idea behind tax loss harvesting is to offset taxable investment gains. Tax loss harvesting is not useful in your retirement accounts such as your 401k or an IRA because you can't deduct the losses generated in a tax-deferred account, so there's no reason to try and minimize your gains in these retirement accounts. Number two, if you hold mutual funds inside your investment account, not your retirement accounts, you could see large capital gains being kicked off in the month of December. Your investment losses can help offset these capital gains that are thrown your way from these mutual fund companies. Number three, this can be a great way to get rid of an investment you no longer want to own. Or if you have a concentrated position in a particular fund with a large gain, consider trimming that position and using some of these losses to offset that gain. Number four, be aware of what is called the wash sale rule. This rule states that if you sell a security at a loss and buy that same security or substantially identical security within 30 days before or after that sale, that loss typically won't be allowed when it comes tax time. So just be careful about that. Number five, this typically helps individuals in the higher tax brackets. You do want to be careful that you don't waste this loss if you're already in the 0% long-term capital gains rate. So please reach out to us to see what makes sense for you. There is no one-size-fits-all with tax loss harvesting or financial planning in general. Please reach out to us and we'd be happy to walk through your specific situation. Thank you.